The greatest Bitcoin explanation of all time. Bitcoin, introduced in 2008 by the mysterious Satoshi Nakamoto, stands as a beacon of innovation in the world of finance and technology. Bitcoin, the first decentralized digital currency, is based on concepts that challenge established monetary institutions and provide new opportunities for financial inclusion and worldwide commerce. Blockchain technology is at its heart, a decentralized ledger that records transactions across a network of computers in a transparent and secure manner. This technique, along with cryptographic security measures and a proof-of-work consensus process, provides trust and avoids double spending without requiring a central authority. Economically, Bitcoin is distinguished by its restricted supply of 21 million coins, which is intended to imitate the scarcity of valuable metals like gold. This deflationary architecture, which is governed by halving events that gradually diminish block rewards, positions Bitcoin as a potential inflation hedge and a store of value in unpredictable economic climates. Retail investors and institutions looking for diversification and exposure to alternative assets have shown a lot of interest in cryptocurrency. Despite its expansion, Bitcoin confronts regulatory ambiguity, scalability limitations, and environmental concerns over energy use. However, continued technological improvements and increased institutional interest point to a bright future for Bitcoin, which continues to alter global banking and reshape economic paradigms. 1. Exploring Bitcoin's technology, economics, and future prospects. Bitcoin, founded in 2008 by the pseudonymous Satoshi Nakamoto, represents a watershed moment in finance and technology. Bitcoin, often referred to as digital gold or the currency of the future, is based on decentralization, cryptography, and scarcity. These ideas call into question traditional monetary systems, paving the way for greater financial inclusion and groundbreaking innovations. As Bitcoin evolves, its reach expands beyond financial markets, altering global economic paradigms and driving further research into its potential as a transformational force in the digital era. 2. Understanding Bitcoin technology. Bitcoin's basic technology is blockchain, a decentralized ledger that records all transactions across a network of computers' nodes. Here's a detailed look at its technological basis. Blockchain and decentralization. Blockchain technology serves as a transparent and immutable record, which is critical for decentralized transactions. Transactions are grouped into blocks and added to the chain through mining, which involves miners authenticating transactions by solving complex mathematical puzzles. This validation method provides participant consensus without the need for a central authority, which improves system security and trust. Blockchain's decentralized structure spreads control across a network of nodes, reducing single points of failure and censorship risks. This breakthrough underpins a variety of applications outside Bitcoin, offering increased openness, efficiency, and integrity in fields such as finance, supply chain, and governance. Proof-of-work POW. The consensus mechanism that drives Bitcoin proof-of-work POW requires miners to devote computational resources to solving cryptographic problems for transaction validation. This mechanism prevents double spending and malicious activity, guaranteeing network security and integrity. POW's focus on computational work encourages miners to compete for block rewards while maintaining decentralized governance. Despite its energy-intensive nature, PO is critical to Bitcoin's durability and trustworthiness, laying the groundwork for decentralized finance and digital transactions worldwide. Cryptographic security. The Bitcoin blockchain's transactions use cryptographic methods to ensure its security. Digital signatures authenticate transactions, ensuring that they come from legitimate senders. Hash functions provide unique IDs for each transaction and block, which ensures data integrity. Network nodes validate transactions separately, which improves security through decentralized consensus. This cryptographic system enhances privacy by concealing transaction data while keeping transparency in the public ledger. Such techniques underpin Bitcoin's resistance to fraud and tampering, fostering trust in digital transactions around the globe. 3. Economic principles of Bitcoin. Bitcoin's economic model and monetary policies differ from typical fiat currencies. Limited supply. Bitcoin's supply is limited to 21 million coins, creating scarcity comparable to precious metals such as gold. This set limit is enforced by a planned schedule that halves block rewards every 4 years in a process known as halvings. This limited issuance process prevents inflation while maintaining scarcity, which strengthens Bitcoin's store of value claim. The scarcity model increases long-term value potential, enticing investors looking to protect against inflation and economic unpredictability. As a result, Bitcoin's restricted supply underlies its status as a digital asset with intrinsic scarcity, resulting in increased acceptance and value over time. Deflationary character. Bitcoin's deflationary character originates from its limited quantity of 21 million coins, as opposed to fiat currencies that are subject to inflationary forces controlled by central banks. This scarcity-driven paradigm encourages savings and long-term value preservation, establishing Bitcoin as a viable inflation hedge. Advocates argue that its scarcity promotes stability and resilience to economic volatility, increasing its appeal as a store of value asset. Despite market volatility, Bitcoin's deflationary qualities highlight its function as a decentralized digital currency with intrinsic scarcity, making it enticing to investors looking for alternative reservoirs of wealth outside established financial systems. Store of value. Bitcoin has grown in popularity as a digital asset and store of value similar to gold. Its decentralized nature and resilience to censorship attract both individuals and institutions looking for alternatives to traditional financial assets. Bitcoin's scarcity, with a maximum quantity of 21 million coins, adds to its value proposition as a hedge against economic uncertainty and inflation. Despite price volatility, its increasing use and recognition as a store of value highlight its potential to be a robust and internationally accessible asset class. This progress puts Bitcoin at the forefront of digital currencies that challenge existing financial norms. For adoption and institutional interest, Bitcoin's transformation from a fringe notion to an internationally recognized asset class has been characterized by rising popularity and institutional interest. Early adopters and retail investors. Bitcoin initially drew in cryptography enthusiasts and tech-savvy individuals, but has subsequently achieved widespread popularity among regular investors seeking portfolio diversification and exposure to digital assets. This increased use indicates a rising belief in Bitcoin's potential as a store of value and hedge against economic volatility. Regardless of market volatility, retail investors are lured to its decentralized character and potential for long-term appreciation. As Bitcoin becomes more integrated into conventional financial institutions and investment methods, its attractiveness as a pioneering digital currency grows, drawing a varied variety of investors looking for new opportunities in the changing financial landscape. Institutional investment, hedge funds, asset managers, and corporations have all made major investments in Bitcoin, seeing it as a hedge against inflation and macroeconomic uncertainty. This institutional adoption has both influenced Bitcoin's price volatility and increased market liquidity. Their move into the cryptocurrency field reflects the rising understanding of Bitcoin's potential as a store of value and diversification tool in investment portfolios. Despite occasional price volatility, institutional involvement highlights Bitcoin's evolving role in global finance, which is driving more acceptance and integration into established financial systems as a viable asset class. Financial infrastructure. The development of cryptocurrency exchanges, custodial services, and regulated investment products has greatly increased access to Bitcoin and improved overall market infrastructure. These advances have reduced barriers to entry for both retail and institutional investors, resulting in increased liquidity and market participation in the Bitcoin ecosystem. Improved legal frameworks and institutional-grade custodial solutions have increased trust in Bitcoin as a legitimate asset class, allowing it to integrate into conventional financial systems. As financial infrastructure matures, Bitcoin's accessibility and usability as a digital store of value and transactional medium are expected to strengthen its place in global banking. 5. Challenges and considerations. Despite its progress, Bitcoin faces a number of difficulties and factors that could affect its future. Regulatory landscape. The decentralized structure of Bitcoin presents regulatory issues for governments around the world who want to monitor and regulate digital currencies. Regulatory clarity varies widely, influencing market dynamics and investor sentiment. Scalability and transaction speed. The Bitcoin network has scalability concerns, which limit transaction throughput and cause congestion during peak periods of demand. Efforts to improve scalability using technologies such as the Lightning Network aim to increase transaction speed and efficiency. Environmental impact. There has been criticism of Bitcoin's energy use, which is primarily driven by mining activities that need significant processing power. Renewable energy projects and efficiency improvements are being discussed as ways to reduce Bitcoin's environmental footprint. Sticks. Future developments and prospects. Looking ahead, Bitcoin's future development and possible applications may influence its place in the global financial environment. Technological innovations. Current research and development efforts aim to improve Bitcoin's scalability, privacy features, and compatibility with other blockchain networks. Innovations like Schnorr signatures and Taproot updates have the potential to increase efficiency and extend application cases. Financial inclusion. Bitcoin's borderless nature and low transaction fees have the potential to foster financial inclusion by giving people in underdeveloped areas access to safe and decentralized financial services. Global reserve asset. Some believe Bitcoin will evolve into a global reserve asset or alternative to fiat currencies, providing stability and value preservation during times of economic turmoil. Conclusion. In conclusion, Bitcoin stands as a revolutionary digital currency and store of value, underpinned by blockchain technology, a transparent and decentralized ledger system. Its capped supply of 21 million coins, secured through proof-of-work consensus, ensures scarcity and resilience against inflation, contrasting with fiat currencies controlled by central authorities. Bitcoin's journey from a niche interest among cryptography enthusiasts to a mainstream asset has been marked by institutional adoption, financial infrastructure development, and regulatory clarity. As institutional investors increasingly view Bitcoin as a hedge against economic uncertainty, its market dynamics evolve, influencing price volatility and liquidity. Enhanced financial infrastructure, including exchanges and custodial services, has democratized access, broadening its appeal to retail investors seeking diversification. Looking ahead, Bitcoin's role in global finance continues to expand, challenging traditional norms and fostering innovation. Its potential to reshape financial systems underscores a profound paradigm shift towards decentralized digital assets, paving the way for a more inclusive and resilient future in the digital economy. Let us know in the comments what you think about this, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.